Hey everyone, and welcome! If you're a CA student, you know that mastering financial management is absolutely non-negotiable. I'm Priya.
And I'm Rohan. Over the next few minutes, we're going to break down the course scope and objectives of FM for you.
Right. This isn't just textbook theory, you guys. This is the bedrock of everything you're going to be doing in your careers. So, let's jump right in.
Okay, so here's our game plan. First up, we'll tackle the big why. Why does this stuff even matter? Then, we are diving straight into the classic debate in finance. Is it all about profit, or is it about building long-term wealth? We'll show you why there's a clear winner, then we'll look at who's actually in charge of all this, and finally, we'll wrap it all up with the key takeaways you absolutely need to nail for your exams.
Exactly, Priya. So let's start right at square one. Why is financial management so fundamental? Why do we call it the engine room of a business?
You know, your ICAI module has this analogy that is just perfect. It says, money is to an enterprise what oil is to an engine. Just think about that for a second. Without oil, that engine grinds to a halt. It's the same with finance in a company. Without it, nothing runs, nothing grows. And as a future CA, you're the one making sure that engine stays running smoothly.
So what does keeping the engine running actually look like day to day? Well, it's not just one thing, it's kind of everything. It's this constant balancing act, right? You're managing cash coming in versus cash going out. You're making sure there's enough working capital to pay the bills, but it's also about the future, setting sales targets, figuring out the right pricing to boost profits, and of course, smart tax planning. You see? It connects every single part of the business.
Okay, that makes total sense. It's basically the lifeblood of the entire company. But you know, this brings up a huge question in finance. If we're managing all this money, what's the end goal? Isn't it really just to make as much profit as possible?
That is the classic assumption, Rohan, and honestly, it's a really tempting one. But as you'll see in your ICAI material, it's not the whole story. Financial management actually presents us with two main objectives to choose from. One is maximizing profit, and the other is maximizing something bigger, something we call wealth or value.
Right. So we've got two different paths, two competing goals on the table. This is really the heart of the debate, isn't it? Which road should a financial manager and the company as a whole actually take?
Well, looking at this chart, you can immediately see why profit maximization is so appealing. It just seems so simple. I mean, it's easy to calculate your profit, and it's pretty easy to link a decision you make directly to that profit number.
Oh, for sure. But that simplicity is also its greatest weakness. Just look at the disadvantages. Profit maximization is all about the short term. And here's the killer. It completely ignores risk and the timing of returns. A decision might look great for this quarter's profit, but it could be incredibly risky or bad for the long run. A simple profit goal just can't see that.
And that, right there, is why in modern financial management, this debate has a very clear winner. Let's dig into exactly why wealth maximization is considered the much smarter, superior approach for building a business that lasts.
So to really get this, you have to understand the major flaws of just chasing profits. First, the word profit itself is kind of vague. Are we talking this year's profit or profit over 5 years? Second, like we just said, it ignores risk. And you know higher profit often comes with higher risk. That's a trade-off you have to consider. Third, it ignores the time value of money. A rupee today is not the same as a rupee next year. And finally, it's just too narrow. It can make companies forget about their other responsibilities to society, customers, and employees.
Wealth maximization, on the other hand, is all about increasing the net present value of the company. Now, what does that really mean in simple terms? It means making the company more valuable for its owners, the shareholders. It's about increasing the market price of the company's stock by creating real, sustainable, long-term value. And this formula really sums it up perfectly. Priya, can you walk us through what this actually means?
Of course. The magic phrase here is present value. See, this approach doesn't just look at profit on paper. It focuses on actual cash flows, the real money coming in and going out. And then it does something brilliant. It discounts any future cash flows to figure out what they're worth today. This automatically takes care of both timing and risk. It's just a much more powerful and realistic way to measure value.
Okay, I'm sold. The objective is clear: wealth maximization. But whose job is it to actually make this happen? Who's in the driver's seat, and how is their job changed to focus on this bigger goal? Well, the person leading this entire charge is the Chief Financial Officer, or CFO. And as you can see from this chart, their world is huge. They're typically overseeing two major arms of the company: the Treasurer, who handles things like cash and raising capital, and the Controller, who's in charge of all the accounting and reporting. It's an absolutely massive and critical role.
And boy, has that role changed over the years. I mean, look at the then column. The traditional CFO was all about accounting, budgeting, filing reports, basically being the company's head record keeper.
Exactly. They were the scorekeeper. But now check out the now column. Today's CFO is a true strategic partner to the CEO. They're in the room for the biggest decisions, managing mergers, analyzing pricing, making calls on outsourcing, and even helping to oversee things like IT and HR. They've gone from just reporting the past to actively shaping the future of the company.
Okay, we have covered a ton of important ground, so let's bring it all home and boil it down to the absolute key takeaways you need to have locked in for your CA exams. All right, 3 things. If you remember nothing else, remember these. Number 1, the goal. The primary objective is wealth maximization, period, not profit. Number 2, the reason. Why? Because wealth maximization is just a better concept. It thinks about the long term, it considers risk, and it understands the time value of money. And number 3, the role. The modern CFO isn't just an accountant anymore. They are a key strategic leader helping to drive the business forward. So, we're going to leave you with one final question to think about. We've seen how the CFO's role has evolved from the past to today. But now, with technology and AI changing everything so fast, how do you think that role is going to change again in the next 10 years? It's something you'll be on the front lines of in your own careers. Thanks so much for joining us for this explainer.